Welcome back. Marico posted its quarterly numbers, and to talk in detail about the quarterly numbers, we have Mr. Saugata Gupta, MD and CEO of Marico, joining with us. Mr. Gupta, thank you so much for giving your time to ET Now. My first question to you is on the revenue front. Now, despite solid revenue growth this quarter, margins came in lower, with raw material inflation slightly cooling off now. By when can we see margins at the mid-20s levels?
You must realize that the margins are optically down because of the significant inflation. And how in our case, it has been an unprecedented inflation where copra, at least in this quarter, YOY was 106% up. Obviously, in the last couple of days, a couple of weeks, 2 weeks, we have seen it come down from the highs and it's around 12% down. I think the issue is this, that we will continue to focus on volume growth. We will not cut down on investments behind brand building, and margins will always come, because in any emerging market, I think the thing is to focus on volume growth and not look at only pricing or not look at any costs. And therefore, the way we see it is that in the second half, we will start recovering on the margins. And next year, always, if you look at copra, usually inflationary cycle, then is followed by a deflationary cycle. Over a 2-year period, margin growths will stabilize and go back to normal levels.
Sure. Mr. Gupta, now with strong top line growth and, a beat on profits this quarter, do you see room for sustained earnings momentum for the rest of FY26? Given we have seen healthy monsoon and are heading into the festive season, how would you like to talk about the narrative that we might see, slightly changing for the festive season now?
So if we look at sequentially, we have our volumes have moved up in the last four from 6 and 8, 9, and therefore we will try and attempt, if we maintain this and try and attempt at least a couple of quarters, if we can deliver double-digit volume growth. And as far as revenue is concerned, given the inflation, I think 20% plus in the zone of 25% is eminently possible, coupled with the fact that we are reasonably confident about international business delivering double-digit constant currency growth or in the mid-teens. With respect to, I think there are three things which are working well for us. After a long time, value-added hair oils have been delivering, will deliver, and is expected to deliver double-digit growth. The diversification agenda is going well. And I think what we need to wait and watch is to ensure that in this inflationary time, we continue to protect Parachute volumes. So given all that, I would say that in the balance year, I think we should be able to continue to deliver best-in-class volume growth, as well as high revenue because of the inflation part of it and the significant consistent performance in the international business.
Mr. Gupta, you spoke about Parachute volumes, which has seen pressure despite a strong value uptake. What's driving this disconnect actually, and where do you see copra prices headed from here?
So I think copra's prices are going up. I think they are off from their peak. It should stabilize a little bit. And as I said, that usually a peak inflationary cycle is followed by a deflationary cycle, which will let us get the margins up. I think Parachute is an extremely strong brand. And in terms of price elasticity, it would be very elastic, given the fact that we have taken nearly 60% price increases, a combination of pricing and some MLA changes. The very fact that in transaction terms it has hit 1% growth, I think is a testimony to the strength of the brand. And if you look at in the past, whether it's in 2014-15 or between 17 and 19, where we had taken significant price increases, and there was very hyperinflation. Hyperinflation sometimes comes in cycles of 5-6 years. Parachute volumes continue to be stable. What happens actually, we compete with a lot of small brands with the unbranded sector. They are impacted. We have a far more resilient supply chain.
Okay, that's right. Mr. Gupta, you did touch base value-added hair oil segment. Now, Saffola and value-added hair oil segment did deliver healthy growth. How are you positioning these portfolios against rising competition in the health and value-added categories?
So I think in value-added hair oil, we continue to gain market share. We have added around 150 bips. We've continued in the last couple of quarters. We have repivoted from our strategy of trying to compete at the bottom of pyramid on trade spends, which I believe is sustainable. We have diverted a significant amount of money towards ATL and drive equity-based long-term growth to drive category, and that is paying dividends. As far as Saffola is concerned, I think we have a focused strategy, which is we will balance volume growth along with profitability and also premiumize. As you know, we have just launched, cold press oils. This is a big trend which is picking up, especially in quick commerce and e-commerce. And these are the two channels which is a lot of, driving growth and also consumer behavior and towards new categories. And we are very, very actually optimistic about premiumizing Saffola.
Mr. Gupta, let's talk about digital first brands because these brands are closing on in a 1,000 crore run rate. Now, we really want to know what's actually fueling this momentum. If you could share with us how much part of the overall pie they would make up by FY27.
Digital and food, which is the new and the premium personal care, which is the uh, diversified part of the portfolio, we expect to be 25% of the overall turnover by FY27. I think we have been also consistently driving profitability in the last 2 years. Food gross margins have increased by 1,000 basis points. The digital business is expected to hit around 10% EBITDA. Plix is broken even. Beardo is around a 10% EBITDA. Our journey is to drive a quick break even in the next 18 months to 24 months, 18 months for the True Elements and Just Herbs and drive a momentum. I think one of the things that helps as the fact that we are now a house of brands with access to the Marico cost structure. And a lot of synergies are happening between brands. So I think we believe while maintaining this accelerated growth, especially for Plix and Beardo, we will be able to also drive profitability. And they will continue to be one of the volume accelerators and value accelerators. What is interesting is this part of the business, which is food and premium personal care, including digital brands and serums and male grooming, are now having a gross margin which is higher than the core portfolio, the traditional portfolio gross margin. So in the future, I think this is a good thing for long-term margin expansion.
Mr. Gupta, let's talk about our international business, which has actually beaten the estimates with 19% constant currency growth. Which regions are actually driving the strength, and are you seeing any tariff-related risks in these businesses?
I think Bangladesh continued to do well. It's been steady. The new products are doing well. The portfolio diversification. We have also been driving, reducing concentration risk of both portfolio and country concentration risk, and that's the reason Middle East and North Africa has been and our new countries have been a investment to grow markets. Vietnam was soft. Some of our category, slams category and internal issues, and we expect Vietnam to start recovering in the second half of the year. South Africa had a soft quarter, but it's a one quarter blip. We expect for the full year to be back into double digits. So I think international is on a good momentum, and as we said that we are driving both, reducing the country concentration risk of Bangladesh as well as the portfolio concentration risk. We have entered some new categories like shampoo, baby care, shower gel, and also in markets of North Africa, a far more aggressive presence in hair oil. As you know, it's a big hair oil market, Egypt and the entire Middle East, and we are rapidly gaining share. As far as tariffs are concerned, our impact is very, very limited. We hardly are present in some of the developed markets, and so that is something which is that doesn't impact us.
Absolutely. Mr. Gupta, lastly, help us understand the kind of demand you are seeing on the urban front while rural continues to be resilient. Are you seeing any green shoots in the urban market demand?
I think two things. Yes, we are seeing some improvement in urban demand. It has been steady and is expected to improve. Having said that, I think I think what we have realized is that our project Setu, which is driving distribution and direct reach, and our efforts to manage the overall GT system profitability is very, very critical, because for incumbents and large FMCG companies, it is imperative that our general trade system, which still contributes a significant part of the business, and well as also creates huge employment in terms of the kirana stores and this one, that we continue to support their growth. And I think in addition to that, we believe that as we expand our new portfolio into urban top-end GT, that will also help. And I would think some of the government initiatives, whether it's the tax breaks and the MSP in rural, the good monsoons which have happened, will help in improving consumption. It will be a gradual improvement in consumption.
All right, with that, thank you so much, Mr. Gupta, for taking time out for this interaction today. Thanks. But then we